they have the choice now to kill inflation or to kill the economy. And well, we all know the Federal Reserve might do another 0.25%. That's what the market expects, and then they'll stop. But this inflation comes in waves. If you look at the 70s, was a last period, the last era of high inflation. It came with 3 waves. So we've had the first wave of inflation. It's coming down now. And I don't care if it's 4%, 5%, 6%, but we'll see a pickup of inflation, I think, next year. And the second and the third wave of inflation will be really scary.
Inflation cycle over. What happens next?
Yeah, this should be the last rate hike. First of all, I think the Fed finally, now this is 13 years of stimulus, okay? Any economy after 2009 that needs 13 years of nonstop stimulus is fundamentally weak, as demographics told me way before 2008, 2023 would be a weak period between the baby boom generation peak and the millennials surging again, okay? So they've been fighting this for a long time, but I think this was a critical mistake here. He overreacted to COVID. COVID was an outside influence, short-term virus, nothing wrong with the economy. $5 trillion in monetary stimulus and $5 trillion in fiscal commitment, 10 trillion, 50% of GDP stimulus. And that's what took us from 1% inflation overnight to 9.1% inflation. And then the Fed was forced to reverse from endless stimulus to tightening. And I say this economy is weak underneath. It's been living totally on stimulus, and it will not react well to this tightening. And I do think that's going to continue to show up. And this will be the last rate hike, 25 basis points. But I think we're going to be in a recession faster than people think. And it's not a normal, oh, the economy's overstretched, blah, blah, blah. This is a second financial asset bubble, bigger than the first one. This one totally artificial. And therefore, it's this bubble bursting in financial assets. And the top 20% that own 90% of financial assets are 50% of consumer spending. So I see a different type of recession that may turn into a short-term depression. It's just a deflation of the second major unprecedented financial asset bubbles. You had the roaring 20s, then you had the 90s, which was a natural bubble with some stimulus. This one is all stimulus, which means it's more artificial, more weak, and I think the market's falling is what's going to tip. I'm looking at the Russell 2000, the most clear chart to me right now, sideways triangle after this first big crash, which did signal to me a long-term top. It was big enough for that. We break 1,700 here, 3% lower in here. The markets are going to head down. I think the markets or the financial asset bubble falling is going to draw us into this unique recession because the affluent people that drive 50% of spending are going to get their asses kicked harder than any time in history. First of all, look at all the rate hikes, which I've done since the early 80s, okay? This is the biggest one in basis points raised. They don't have to do any more than that. This hits, folks. Everybody should know this. 12-month lag. The 12-month lag on the March to recent raise in rates will just start to hit right about now in April and hit harder into early next year. I think the economy is going to weaken no matter what they do. They're dumbasses. The Fed has been you cannot run an economy on nonstop stimulus. You cannot say you believe in free markets and then not let the markets be free and correct and wash out debt and zombie companies when it needs to. That's what free markets do the best. It's not just success in entrepreneurialism and capitalism. It's failure. It's allowing failure. So this is a huge misunderstanding. I think the Federal Reserve understands nothing about the economy. How many of these guys, him included, Janet Yellen, for crying out loud, looked like she came out of a nunnery, okay? How many of these people have ever run a business? And they run our economy. Well, I mean, I really don't think all they do, they say, oh, he's doing a good job. If the economy's strong, they tighten, and if it's weak, they loosen. A 2-year-old could do, okay, a 4-year-old could do.
Jerome Powell's feeling ill, and you've been nominated as the replacement. So you are now taking Jerome Powell's role. You got to do it. What do you do? Like, as you walk in today, what do you do?
I would say no, because you want to walk in the president into a recession that's already baked in the cake, which some of us asked Jimmy Carter and some others. First of all, I would say the Fed is not in the business of regulating and driving the economy. It should have emergency injections when there's a real emergency. And COVID was a bit of that, but that would have meant a one-time injection. I would have had no problem with a $1 trillion injection in the early 2009 and that downturn, and maybe something like that in COVID short term. But to keep saying the economy has to go up and we can't have a recession, we would have no economy without recessions. If you don't understand that recessions are just as important and booms, like sleep is just as important as waking, then you don't understand the damn economy. So I don't think these people know anything. I don't think the Fed should be in the business. They should be providing enough money to conduct business and responding when there's a real short-term emergency, short-term. They should not be in charge of preventing recessions, which are the most fruitful thing the economy ever does. I know I was a turnaround manager for my first decade to small entrepreneurial businesses. I could make 10 times the change in a downturn I could when everybody's complacent in an upturn. Downturns, recessions are not bad. If you don't want a big recession, don't have a bubbly boom and overstimulate. And we've been stimulating nonstop for 13 years until last year. Insanity.
Yeah, and I think it's important, and what Harry's saying is absolutely correct, is that when you have a baseline, right, if you just keep recessions so the booms are just a little up, then the recessions are a little down. It's when you stimulate, you create the huge bubble, which in response then has to have the big downside as well. It's just the nature of life, right? I mean, if you're going to do a lot of drugs, you're going to have a big crash on the other side. I mean, it's the same kind of principle there. So definitely 100%. I do see a recession coming in the second half of this year. I'm looking at it in terms of the jobs data. We're starting to see that crack in the last report. I think we get another one next Friday. We've seen the inflation numbers come down, but not enough to enable the Fed to step in. And that's the key, right? So getting inflation from 9% down to 5%, easy, right? I mean, that's just, supply chain starts to work again, all that stuff. It's that last, 5 to 2 that's going to be the trickiest thing. And I think that's where people in the market, for me, I look at the stock market. I'm slowly moving in more and more into the short side of the S&P and the NASDAQ. And that's purely from the aspect of investors are in this phase of saying, okay, the Fed will rescue us no matter what because we've been conditioned, just like an animal. The bell rings and you run to get the food. That's the way the market investors are. The Fed, the difference here is that with inflation north of, let's say, 3%, I don't see how they stimulate in the same way, because then they're going to send inflation to 20%. Instead of 9, it's 20, right? And so that's going to be a shock for the investing public when they finally realize the Fed can't bail them out. Now, it's not to say the Fed's not eventually going to come to the rescue. We know the Fed is notorious for moving goalposts. Eventually, 3% inflation will be fine. Eventually, 4%, and it'll just become the norm. So yeah, I think recession second half. I'm not predicting a depression at this point. I think that comes later in the decade with the 100-year cycle, just like COVID and the Spanish flu. But I think this is the beginning of that table setting for it.
Is a recession a depression where people are on the streets, or is a recession just numbers are a little bit down, more than usual statistically? A little bit more people than usual don't have jobs. And that sounds to me like a normal bottom in the cycle. I think it was Harry who said it. He said, if you're going to get really drunk, then expect to wake up this morning like I woke up this morning with a little bit of a hangover. It's like, it's natural. I got drunk last night. I woke up with a hangover. I have 2 cups of coffee, and then I'm back on this. I'm back in business again. Or am I missing something? Are we going to get a 1929 style depression? I wasn't around for 1929, so maybe you guys can help me.
Not
yet. Real quick, let me start on this one. This is important. Recessions follow normal business expansions, and you always have an expansion and always a recession. No matter what any dumbass economist says, we won't have recession, okay? What the difference is, depressions follow financial asset bubbles like the Roaring 20s and like 1995 to 2000. And so it's the financial asset. It's the sudden and near permanent disappearance of wealth. It's not so much people layoffs are going to cause this overexpansion, normal recession. This is a second bubble. Everybody's way richer. People are sitting in a $400,000 house that was $100,000, even adjusted for inflation 10 or 15 years ago, for crying out loud. You did nothing, okay? So you have to take this excess out. Everybody gets hit, but here is the big difference in a depression. The rich get hit the worst. It's financial assets that go down even more than the economy. Unemployment might hit I have a 1.5 time factor to 2008. Unemployment was 10 or 11 then, it'll be 15 or 16 now. Stocks are down 57, S&P they'll be 86% now. This will be bigger, but it does hit the upper crust more. The everyday person, more layoffs, okay, we're used to that. Rich people aren't used to losing half their net worth overnight, okay? That hasn't happened. And every crash, even 2002, the NASDAQ was down 78% 2002, more than other areas. But it comes right back and makes new highs. You mark my words on this and kill me if I'm wrong, because I'll probably be dead by then anyway. If we will not see new highs in these stock markets before I am dead, okay? And I'm planning, no, give me, 2040.
So let's get right into it. Are you concerned about the threat of central bank digital currencies? And I assume the answer is yes. What are the specific risks that you see to America and civil society from CBDCs being rolled out?
Look, I'm very concerned about the risk of a CBDC. Joe Biden, early in his presidency, issued an executive order directing the Federal Reserve to study creating a central bank digital currency. And the New York branch of the Fed is actively working on doing exactly that. I think that's exceptionally dangerous. We see China moving forward with the intention of using a CBDC to destroy all the value of Bitcoin, to destroy anonymity, to destroy decentralization. Their objective is precisely the opposite of a distributed ledger system. It is they want a centralized ledger that the government has complete visibility into and complete control over. And I think that is profoundly dangerous. I've introduced legislation to prohibit the Fed or the federal government from creating a CBDC. I don't want the government having control over your finances. You look at last year, the Biden administration's top legislative priority, what they called Build Back Better. One element of it was a requirement that banks report every single transaction in excess of $600 to the federal government. Now, if you think about it, that means your rent payment every month. If you own a home, that means your mortgage payment every month. You own a car, most car payments now are north of $600. It is literally the government having visibility on virtually every transaction you're making. That's their stated goal. I think it's a terrible goal. By the way, the same people that want a CBDC, they hate Bitcoin, and they hate cash. Let's be clear, they don't like cash for exactly the reason I like cash. Because it is not subject to centralized control, it is not subject to constant surveillance. And so I hope we see growing resistance to a CBDC. I am very worried that we will see, even in the next couple of years, the Fed roll it out and not wait for Congress to act. At a minimum, before we did a CBDC, which, as I said, would be a terrible idea, but at a minimum, if we were to do it, it should be Congress making that decision, elected by the people, not Federal Reserve governors that have no accountability to the American people, just by fiat decreeing a new form of currency.
Yeah, I really appreciate that answer, and I think a lot of Americans on both sides of the aisle share that same fear. Well, let's move to Bitcoin. How do you see this network, this asset, benefiting or advancing American strategic interests, particularly abroad?
Look, I am incredibly excited and incredibly bullish on Bitcoin specifically, crypto more broadly, but Bitcoin in particular. I think Bitcoin is clearly the alpha in the crypto sphere, both in terms of coming first and also being clearly the most dominant. I think the analogy of digital gold is powerful. And the insight that led to its creation is still extraordinary. Listen, I'm a Bitcoin investor personally. I have a standing buy order. Every Monday morning I have a buy of Bitcoin that comes in, and I own a little more than 2 Bitcoins. So it's and every Monday I own a little bit more. And I will say, I bought the dip, which I was quite happy with.
but I'm also a long-term investor, so I'm fine with some volatility, and I recognize that there's going to be going ups and they're going to be going down. But 21 million is a number that is a firm number. And I think one of the attractions to Bitcoin, certainly for me, but for many, is as a hedge against inflation. And particularly when you have irresponsible politicians in Washington that spend money like drunken sailors, which is actually not fair to the sailors because at least they're spending their own money. And that print trillions and trillions of dollars. We see inflation all across the country. That was driven by this spending binge that happened the last 2 years in Washington, and it unleashed significant inflation. I think Bitcoin is an important check against that. I think it is also powerful in that it is decentralized, in that it is far less susceptible to government control. Listen, I like Bitcoin for the same reason that the Chinese Communist government doesn't like Bitcoin. They don't like Bitcoin, and they banned it because they can't control it. By the way, I would note, and you guys asked me to be nonpartisan, but I'm just going to observe, China hates Bitcoin for the same reason Elizabeth Warren hates Bitcoin. Because they both want to control it. And it comes down to fundamentally, do you want the government in charge of everyone's money? If the answer to that question is yes, then Bitcoin scares the hell out of you. And I'll point out, all right, one powerful illustration of that. Y'all remember back during the COVID pandemic, you remember in Canada, the truckers were protesting the vax mandate. And you had Canadian truckers standing up and protesting, and it captured the eyes of the world. And look, I was born in Canada. There's one thing Canadians are known for, which is being really, really nice. And you had Canadian protesters protesting loudly and not being nice. And you had Justin Trudeau, the Prime Minister, trying to crush them. And we saw initially, people were raising money to support the truckers and doing it through GoFundMe, and then GoFundMe promptly shut it down and said, we're going to control your money and not allow you. And then people started raising Bitcoin. And the Canadian government sent a letter to Nunchuk asking for, please give us their Bitcoin. And the response, if you have not read this letter, it's a beautiful letter. I'm just going to read part of it. So this is the letter that the Bitcoin company sent back to the Canadian government. We do not collect any user identification information beyond email addresses. We also do not hold any keys. Therefore, we cannot freeze our users' assets. We cannot prevent them from being moved. We do not have knowledge of the, quote, existence, nature, value, and location of our users' assets. This is by design. Please look up how self-custody and private keys work. And then the letter ends with, when the Canadian dollar becomes worthless, we'll be here to serve you too.
Yeah, I think the politicization of banking is a terrifying concept. No offense. I don't want anybody in Washington deciding what I can spend my money on.
I agree.
And so to round things out, Senator Cruz, along with Senator Lummis, who's also going to be speaking later this afternoon, I think you are one of the most knowledgeable people in Congress, especially in the Senate, when it comes to Bitcoin. So my last question is, what are the most common misunderstandings you hear about this technology, and what do you wish your colleagues would understand about it?
So look, there are a lot of misunderstandings. You may recall back during the infrastructure bill, there's a provision there that seeks to regulate Bitcoin and crypto and to treat every Bitcoin miner as a broker-dealer. And it was put in. I stood on the Senate floor. I offered an amendment to strike that provision from the bill. And unfortunately, Bernie Sanders and the Democrats objected. and wouldn't strike it. And the problem is, I still, to this day, we have 100 senators. I don't know that there are 5 senators who could tell you what a Bitcoin is. Like when you ask what my colleagues don't know, Otto von Bismarck said there are 2 things you don't want to see being made: sausage and legislation. And in both instances, there are a lot of blood and guts go into it. That provision was put into the bill with very few people having any awareness of what they were doing, of what the consequences would be. And actually, if Treasury enforces that language vigorously, it has the potential to wreak utter havoc for Bitcoin and crypto writ large. From my perspective, I'd say about 2 years ago, I started wanting to learn more. And look, it is true that I know more about this topic than many of my colleagues, but it is a standard. It's in the land of the blind, the one-eyed man is king. I know less about Bitcoin than any person in this room. And I recognize that. I will say one of the things that I've tried to do is repeatedly sit down with experts, sit down with people in the industry, sit down and have dinner with them and just talk, just ask them, okay, explain. I ask lots of dumb questions. I'm a big believer that, like, if you ask dumb questions, that is actually how you start to understand what's happening. That is not a typical approach on Capitol Hill. And so, does there need to be a regulatory framework for Bitcoin and crypto more generally? Yes. But I think we need to proceed slowly because the potential for damage is enormous. And beyond that, there's just a general sense of we don't trust it because we can't control it. I think a lot of my colleagues think, well, if you're doing Bitcoin, you must be a drug dealer or doing money laundering because that's the only reason you want privacy over your financial affairs. And so I think we collectively need to tell a better story explaining the benefits. And that's certainly something that I'm trying to do.
So, Harry, are you saying that right now you would, if you were allocating your currency, you'd be majority in the US dollar, from what I'm hearing?
Yes, now that's right. And by the end of 2024, I would see the dollar slowly. I mean, it's going to go up and down, but it's going to go down. It's going to be overvalued by then, no question. After 2 deep recessions, just as a safe haven. Okay.
I see Willem warming up for the next.
Yeah. This is a topic I love. The subtitle of the Big Reset, you can download this for free on the website. It's the financial endgame. I've been studying the financial endgame, for over 10 years. And I just wrote a little piece for on my Patreon account. And I wrote that the petrodollar deal of 1974 was the foundation, was essential for the dollar to remain the world reserve currency after Nixon took the dollar off the gold standard. So for the last 50 years, the petrodollar deal was the foundation for the strength of the dollar. But now, it's the end of the petrodollar deal. And I'm not the only one saying this. I have a text here in front of me of Credit Suisse, Zoltan Pozsar. You might recognize that name. He's a former Fed official. He wrote March 7th last year, 2 weeks after the Russian invasion. He wrote a wonderful piece. You can find it online. It's titled Bretton Woods 3. We are witnessing the birth of Bretton Woods 3, a new world monetary order centered around commodity-based currencies in the East that will likely weaken the euro-dollar system and also contribute to inflation in the West. I will read 2 more lines. A crisis is unfolding, a crisis of commodities. Commodities are collateral, and collateral is money. And this crisis is about rising of outside money. After this crisis is over, he says the dollar is valued a lot lower. This Credit Suisse, there's not some gold bug.
Kind of like, how would you allocate your portfolio in terms of currency allocation? What percentage would be in the dollar? What percentage would be in the euro? Would you have anything in the yuan? Would you have something?
I always look at the big cycles. And if you look at the dollar index, actually, this is the first time this crisis after the Silicon Valley Bank, people didn't flee into the dollar. The dollar is down almost 10% over the last few months. So it's the first time when we have a crisis where people don't flee into the dollar. And if you look at the dollar graph, take the 60-year, the 70 chart, you see 3 major tops for the dollar. And every top is a lower top. So the dollar is in a long-term downtrend. And the last rise we've seen in the last 2 years for the dollar You know, we topped out in October, November last year. I think that's a major top. It's a lower top than the other major top. So we're in a major downtrend for the US dollar. But, well, when crisis hits, some people might start to flee again in the dollar, but we don't see it now. And if you ask for my currency allocation, I see gold as a currency. I always have this model portfolio, 25% of your investment in real estate, 25% in equities, 25% in physical gold and silver, and we keep 25% in liquid assets like Bitcoin.
Only Bitcoin or Bitcoin and Ethereum too?
I prefer just Bitcoin, but I'd like to keep it simple. You could add Ethereum. Bitcoin is a digital gold, Ethereum is a digital silver.
Okay, but what if I mean, for someone who's allocating into Bitcoin, what if I said to you, look, you've got something that is more used than Bitcoin, that's called Ethereum. Every time it's used, you burn some Ethereum. So unlike Bitcoin, which is mildly inflationary, as we all know because of the algorithm, Ethereum is actually deflationary.
It's not decentralized. And, you know, the amount of Bitcoin is limited, 21 million. And that's what makes Bitcoin the best store of value, the best digital asset as a store of value. And this is such a rare opportunity, and it's still cheap.
I've provided some links down in the description of this video. And if you found any value in this video, please hit the like and subscribe button below and click the notification bell if you want to be notified when my videos are released.